You are listening to the Mark Guzman Podcast Experience. Late last year, the U.S. Congress passed the biggest sweeping tax reform since 1986, completely overhauling the tax code as we knew it. If you are like a lot of Americans, you probably have a lot of questions in regard to how this new tax bill could impact you. Our guest today is Aida Q. Torres, who provides tax services as well as real estate services out of her office in Hercules. We have her on the podcast to talk about this latest tax bill and how it will affect Californians. I want to introduce my guest today, Aida Torres. She's a CPA.
I'm enrolled agent.
Mm-hmm. And she's here to talk to us about tax help and real estate taxes. So let's get started. What specialty do you focus on when it comes to taxes?
Well, my specialty expertise is in 1031 exchange.
Okay.
Since I'm also a licensed realtor, so it's a good combination of taxes, tax consulting, wherein my client will minimize, reduce, or sometimes can avoid tax, paying taxes such as capital gain.
Yeah, we just had a really good episode on 1031 exchanges. And on that episode, we were talking about, we had someone from an exchange company, and we also had someone from hard money, and talking about how the entire exchange worked. It would have been great to have you on that episode to talk about how the taxes really come into play.
Yeah.
So let's talk a little bit about 1031 exchange and taxes, because I was just at the California Association of Realtors winter meetings and attended a class where they specifically talked about 1031 exchanges. So let's break it down. A lot of people don't understand what a 1031 is for, and as realtors, we throw out that term out all the time.
Okay, let me give you the word deferred. Okay, that word applies to 1031 exchange, wherein the capital gains tax is deferred, but you have to satisfy the requirements of the IRS. The requirements of the IRS in order to qualify for 1031 exchange, you have to have met the number of days, such as 45 days. The 45 days have to be satisfied from the date of closing of the one you sold to pick up the property that you will exchange for that one, and also to close within 180 days, which is 6 months, and that 45 days is part of the 180 days.
Yeah. Now, one of the biggest that 45-day marker, that's to identify up to 5 properties, correct?
Right.
And then you have to purchase one of those 5 properties.
That's right.
One of the common questions we get all the time is, well, can I buy a property that I have not identified? Or what happens if I identify up to 5 properties and then after I cannot close on one of those properties? What happens?
Well, as long as you can close it within 180 days. I believe you can still qualify for that.
But they have to buy one of the identified properties.
Yeah, they have to buy one of the identified property.
Yeah, so the problem is if you have identified properties and you don't close on one of those, then you're stuck on paying the taxes.
That's right.
Yeah,
that's
so
right.
It's really important for people to work with not just the real estate professionals, but the tax professionals and the exchange company professionals to make sure it's all done right. Now, the other thing, too, that I didn't know is that the deadlines are you have to the 180 days you have 180 days to close on an exchange or your tax filing date, whichever is sooner. That I didn't know, and that I thought was very interesting because Now that throws a whole nother mix into it because it comes down to when you file your own taxes.
That's right. That's right. Also, another one, although this is not a 1031 exchange, the word tax free exchange, which applies to Section 121 of the IRS, and that's applied to principal residents. And the law, which is currently applicable to 2017, okay, that's the holding period of 5 years, and out of that 5 years ownership, you have lived continuously for 2 years. That qualifies for the tax-free exchange, applicable only on principal residents. Now, the new law, which will be this year, 2018, of which we don't have any effective date yet, but it was a proposal in the Congress. The holding period now will be 8 years, and out of that 8 years, you have continuously lived for 5 years in order to qualify for a tax-free exchange of Section 121 of the IRS Code.
So I heard about that, but is that final in the new bill?
The new bill, it hasn't, I have not seen the date yet, the effective date, but that was the proposal of our president.
Okay. So how long have you been doing tax and real estate work?
I've been doing taxes in 2000, year 2000. I got my office in 2006. No, yeah, I moved to my office 2006.
Okay, and you say you're a realtor, right?
Yes, I'm a realtor. I got my condo office through my service being a realtor. But during the time when we moved to my office, the real estate market really went sour.
Yeah, when they crashed in the
That's the great
2008. Yeah.
recession of 2008, and it's really, really, it's the drop in the housing construction was severe, housing bubbles, and bad credits.
Yeah.
And during that time, from that year on, my real estate business dwindled. So I focused on being an enrolled agent, although I already have a tax-based client. And during that time, I don't have my license, a professional license as enrolled agent. I got my license in 2012 and active in our association, which is a 325 membership, is by enrolled agent in the office is in Dublin. And I volunteered and improved my tax profession to the next level. I was nominated and elected as membership chair, a second VP, first VP, and president in the span of 2012 to 2017. And right now, this year, I'm in the immediate past president.
Oh, well, congratulations. Yeah.
And
I know how it is
I know.
participating in local organizations.
I know, and also was appointed as finance commissioner of the city of Hercules.
Okay.
Yeah, so those really, I find it really very, helping my profession, sharing your time, your knowledge and effort in the community,
And giving back.
giving back.
Yeah, it makes a big
Yeah.
big difference because you give back, but you get so much more out of it in the
Yes,
end,
yes.
from just the satisfaction of volunteering your time to the network and business connections.
That's right.
And eventually
Yeah.
all that just comes back to you.
That's right.
Now, do you focus more on taxes or do you focus more on real estate these days?
Well, when it is tax season, which is really February to April, okay, I focus more, but I do service my client on their real estate need. Now that the real estate market is really lucrative right now, this kind of season this year, I make it a point and my goal to at least to have one escrow closing per month.
That's pretty good.
Yeah.
Now, your office is located in Hercules,
Yes.
and on Alfred Noble Park,
Yes, that's right.
500 Alfred Noble
That's
Park,
right.
right?
Mm-hmm.
Okay. And have you always really focused on the Hercules area, and or what's your main area of
Oh, well,
focus?
no, I Bay Area in a way, and I do sell condo also in the Philippines, which is similar to the real estate market here
Oh,
in the
so you're
United
an
States.
international agent then.
Yes, yes, yes.
What are
Because,
the licensing laws requirement like over
well,
in the
you
Philippines?
just need to have a connection over there, over there, and well, since, our real estate licensing is similar to what they have. It's easy to sell.
How are the
So
real estate laws over there?
the real estate law is really pretty much catered to United States. So, but the only thing is that, um, on the mortgage underwriting is too slow. That's all I can think of that is really different from here, because we do have 45 days, but over there it's kind of hard. But the fastest way, if you buy cash, so that's the one,
Okay.
because the exchange rate is for one US dollar is equivalent to 50 pesos. So
Okay.
you can see the investment is really good also.
So in US dollars, what would be the price of, let's say, a condo or maybe a single family house out there?
Okay, I just closed a deal, okay, on a one condo on a tower of 50 stories, okay, and this is about 55 square meter. So you multiply it with 11.71 to convert it to square feet, okay, it's probably around 400 or 500, and that's about 200,000. But this is really on a high end. It's about 10 million pesos. That's including the parking. The parking, you can have it rented for 5,000 pesos, uh, s- uh, aside from the unit itself. The unit itself is about probably 1,400 a month in dollars. So that's very good.
Yeah.
It's a very good
And you
investment.
said this is on the high end.
High end, high end.
Wow.
BGC, which is Bonifacio Global City, or Deferred, and it's really good. So I make it a point, to service my clients. Since I have a tax-based client, um, I offer it to them because I know what they need for write-offs.
Yeah.
So that's the one. Okay.
So how do you show these properties? I mean, do you take your clients and fly them down there, or do you fly there yourself
No,
and you do
I
virtual
have
tours?
internet. I have a connections over there, and then she will email it to me and send it to my client and have them reviewed. And I said, if you want more information, go to internet and check it out yourself. And that's how I close it.
Okay. So mainly just over the internet, you're looking at
Yeah,
properties and buying
that's
that
right.
way.
That's right. So
Yeah.
that's the $10,000. The commission is about 6,000 plus. That's not bad. Showing it internet.
Yeah. Now, working in the Bay Area
Mhm.
and the real estate market here, what's been, in your opinion, unique to the Bay Area?
Well, the Bay Area, in a way, is that, the nature itself, different kinds of living, like condos, affordable condos, and high-end housing. In every city has a different part of every city that they have high-end, affordable, and sometimes, you know, um,
Like in the middle?
like in the middle.
Yeah.
So those are the things that really um, that you can offer to your client, and they will decide which one they want. And on that kind, that's how do you call it? That's your deciding to show what property,
Okay. Yeah, like the criteria.
the criteria, and also the features that they're looking for. So those are my basis of selection.
So with a tax background, do you tend to work with a lot of investors?
I tend to work with professional like engineers, nurses, and also first-time home buyers. Right now, Wells Fargo has a neighborhood lift. We're in helping first-time home buyers, but more so on the professional market.
I heard about that program with Wells Fargo. I
Yeah,
think they assist you with up to 30,000
thirty
for a
thousand
down payment,
dollars.
right?
Yeah, I do have two clients that I'm working on, but the only thing is that because of the approved loan is kind of low, it's so hard to ratify the contract. So I really have to look for um, a property that we can offer that is acceptable to the listing agent. So I find it so hard.
Hmm. So let's walk us through one of your processes when it comes to assisting your clients with their taxes.
Well, my uh, process is user friendly because I do send my client tax organizer through electronically, and they send back their documents because I have other clients in different states. So they send to me through electronically. But those that are not savvy nor they don't even have email, they come to my office to bring their tax documents. And for new clients coming on board, we interview them, and because I don't want to be in the scam because there are some walk in that are really not legit taxpayers. So we are very, very careful in that one. And
Wow, like walking
yeah,
customers that are scammers.
yeah. So we have to be very, very careful. And we do a lot of interviews and source document to be presented. So if they cannot present it, they're not coming back.
What kind of scams are going on with customers coming in?
Well, some they use um, social security that they're not theirs, and some doesn't have any social security, and they apply for you know um, social security. I mean W-7, but it's so hard to have it approved by the IRS.
Okay, I kind of heard something similar to where people were filing taxes and filing for returns on other people's behalfs.
That's
The
right.
IRS gets the money, or sorry, the IRS gets the returns.
Mm-hmm.
They file the return back to the taxpayer,
Mm-hmm.
and then they cash the checks and then run off. And
That's
then
right.
the real
The real.
taxpayer
Mm-hmm.
finds out later, or they're filing their taxes and
Yeah,
find out that taxes
that's
were already
identity
filed.
theft. Yeah,
Yeah.
identity theft. Those are the really scammers that we really have to be careful for.
Yeah, and I heard it's really hard for the IRS to even catch these people because their whole entire system is so
Yeah,
outdated and
sophisticated.
yeah.
That's right. So we are very careful, and also our computer system. My office is really how do you call it, with alarm, and that's the requirement of the IRS. So um, we have the alarm system, and also in our system that we have to have it backup, you know, and in that way, uh, knock on wood, we don't have that kind of issue yet, and hopefully not in the future.
Yeah.
Yeah, because our data are all confidential, and I train my staff that all things in this office are confidential. Nothing will go out um, outside my office.
Now, what's a common question that you get a lot from your customers? What
Well,
like a common tax
the
question?
common tax questions first. The most common one is the rates, our service rates. That's the most common one, and then um,
What are your service
what
rates?
what are my savers saying? I said that we do have a rate schedule that I can email to you and you decide. And regarding qualification, I do have a website that you can check. Um, and my designation and everything. So I said that everything is in my website. You can check it out. And
And what's
uh,
your website?
www.idatorres.com. And right now, being in construction right now, being improved, it will be ready by this month of February.
Okay.
Okay.
And so, a common question that you get when it comes to taxes, I'm sure many people are wondering about the latest tax law.
Oh yeah, the
Now,
latest tax law.
and I've had a few people ask me if that
Uh-huh.
tax law is for 2017 or if it starts in 2018.
No, well, the Trump proposal uh, is being enacted by Congress, but it's not in effect yet. So all the old law is still applicable on 2017 tax season, and the only thing that I have gathered for effective date is January 1st, and that's applicable for mortgage interest. Wherein the old law 2018, the old law is 1 million, and it was reduced to 750 um, thousand for mortgage interest in order to be deducted, but that's applicable to principal residents. The rest is not affected on rental property.
Okay.
It's still the same.
Okay. And then, do a lot of people come to you with questions about deductions for children? Because I know that's,
Oh
you know,
yeah, the deduction, which is the dependent issue right
correct.
now,
Yeah.
wherein it will be in 2018, not 17, wherein the dependency personal deductions will be eliminated, and it will double the standard deduction. That's in lieu of what was eliminated, the dependency allowance for for children.
Yeah. I was reading some articles of how this new tax law is not really going to help many people,
It does, yeah.
but um, self employed people
Mm-hmm.
or owners of pass through entity businesses
Mm-hmm.
are going to get a little, they're
Break.
going to get like a 20% help up to a certain limit.
Yeah, that's applicable to corporation, um, because the corporation tax rate, it was changed to 20%. In that way, they will be coming back to the United States, because most corporations are outsourcing out of the United States, because the United States is the highest tax rate, including the state. Out of the 163 nations, we are the highest tax rate base in regards to corporation to businesses. So President Trump really lowered the rate to 20%. In that way, to improve the employment industry coming back.
Like incentivize them to come
That's
back.
right,
Yeah.
sent to come back, and they are coming back. The corporation.
So it's really working then.
It's really working, but still not applicable. It will be applicable this year, not in 2017. All those proposal is still not in effect in 2017.
Yeah. So, and the other thing with that new tax reform too, and correct me if I'm wrong, but um, you also get a 20% deduction from the taxes owed if you're self-employed and you have a pass-through income. So, if, for example, if you're an LLC or
Mm-hmm.
sole
Yeah.
proprietorship or limited liability partner, and we'll use real estate as an example. And also at the Association Realtors conference, they
Mm-hmm.
had a sample breakdown of how a realtor who makes an average income of 55,000 a year is going
Mm-hmm.
to pay about 50% less in taxes
Mm-hmm. Those
just with
are
the new
for
tax
the
reform.
pass-through entity like
Yeah.
LLC and everything. They receive Schedule K, um, or a single member LLC, which still reporting is on Schedule C, 1040. They get a break on that one. But there is an income limit of 150,000 in order for them to be able to deduct their write-offs, which is 25,000 limit of the loss.
Oh, so there's a
Yeah,
limit you
yeah.
can.
There's a limit for the loss. Okay, the operation loss of 25,000, and there's also an income limit of 150. Um, if the income is more than 150, it is suspended on Form 8582, which is a passive loss. That you can only avail to that loss once you sell the property. It will accumulate though, which is really, it's a write-off, and that really reduce your capital gain tax should you not exercise the 1031 exchange.
Now, now going above that $150,000 limit, the one big topic that they were discussing is how it's going to benefit a lot of property owners, like actual investors that own many, many
That's right.
properties.
Mm-hmm.
Now, and I guess part of that is to qualify for that 20% deduction.
Mm-hmm.
There's something with meeting 50% payroll figures.
Oh yeah, the
And
payroll really helps. It's a
payroll,
write-offs.
yeah, and payroll, paying yourself as an owner counts
Mm-hmm.
toward that payroll figure. So
Not
how does that work?
not just payroll, pensions, retirements. Really, it's an expenses on your Schedule C or your K1 that really lowers your the bottom line net income. So it reduces the taxable income.
But what's the requirement with that 50% limit? There's something with like a 50% limit of the W-2 salaries that you actually pay out.
Well, let me check on that one. Is that I have not seen that that new law yet on that one and the 50%. But the current law right now, okay, um, you can expense off payroll, retirement, and pensions direct from your gross income.
Yeah, look into that. I'm curious to see what your thoughts are on
Yeah.
that,
Mm-hmm.
because it had to do with something with this was a loophole for large property investors that
Mm-hmm.
own a ton of property, where it's something to where if at least 50% of total salary paid is a certain dollar amount, then you qualify for that extra 20%, regardless of the $150,000 limit. And this
Mm-hmm.
is a loophole for big investors because they could pay themselves as an owner a salary and take advantage of it, which is why part of it was criticized because Trump is a real estate guy,
Oh yeah,
and
he's
this loophole
applying.
is there specifically for him and his
That's
group.
right. Uh-huh.
Yeah.
Well, the only thing I can think of for that 50% loophole is that it's applicable to investors' retirement and pensions, wherein you can take deductions for that, and that's all I can think of the 50%. In that way, you're subject to 20%. You know, uh, is it 20% tax or what that you have
Like
gathered?
like deduction?
Uh-huh. Deductions. I'm not familiar to that because most of my 1031 or investors are only on a four properties, not on the one that you were thinking of, like the President Trump.
Okay. Now in California though,
Mm-hmm.
they're lowering that interest deduction from a million down to 750,000,
Mm-hmm.
correct?
Yes,
And that's for primary residence only.
that's right. That's right.
And that is a huge deal. I mean, it's going to affect many people in California, but it's also a lot better than what it could have been,
Yeah.
because at one point they were talking about eliminating it entirely.
Mm-hmm.
And then they came back with one of the proposals that they wanted 500,000,
Mm-hmm.
and they ended up settling at 750,000.
750, which is really better than 500.
Yeah, yeah, exactly. But
Yeah.
that 250,000 drop is going to affect a lot of people. Now, does this also apply to second homes?
I believe so.
The 750,000?
Yeah.
Okay.
Yeah. Second homes considered as, principal um, residence. So you can deduct that one. But it's limited to 750 now, effective January 1st, 2018.
Okay. Are there any other ways that Californians are going to be affected by this tax bill?
I believe California conforms to it.
Okay. What about, and here's another question for you. The $10,000 limit that's in the
On the
tax.
real estate. Hmm.
So so I've heard two things. I've heard it's $10,000 limit on property
Property
taxes you can
taxes.
deduct,
Hmm.
but then I also heard another thing where it's property taxes and or state income tax. So you're still limited. So if let's say your property taxes are 6,000 and your state income tax is 6,000, that's a total of 12,000
12,
where
yeah.
before you could deduct the full 12,000,
Uh-huh.
but now you're going to be limited and capped at 10,000.
Yeah,
Is
it's a
that
cap.
correct?
Yeah, it's a cap of 10,000.
Okay, so that's going to hurt Californians even more because
Yeah.
because for some people that depend on taking that deduction for both property taxes and state income tax, now they're capped at 10,000,
Hmm.
and whatever amount above that, they're going to have to pay taxes on that.
Yes. Yeah.
Okay.
That's in 2018. Not this
Not
year.
17.
Not 17.
Okay. But yeah, so going forward, it seems like Californians are definitely going to be paying a lot more in
Yeah.
taxes.
Yeah. And that's the reason why the corporation was given a break of 20%, because including the state taxes, it's really really high, the old law. But now it's 20%. That's the reason why some corporation now are giving bonuses because of the break of 20% to their employees.
I bet you they're giving it to the executives and not all the employees.
Okay.
So what do you see happening in the next 5 to 10 years with this tax bill?
Well, I can see that this new Trump, tax plan, really it will be in a couple in a 1 or 2 years they will always do revisions. So no one can predict, but it will be subject to revisions as like uh, other laws, tax laws of different presidency. Like when Obama took office, he revised Bush, the healthcare plan. So it's the same way. So whoever the president elected by the people of the United States, for sure, in the next 5 or 10 years, we will have different.
A new tax law.
Yeah. So it is in the hands of the people of the United States, whoever they vote for the president. It will affect our government. So, but there will be revisions, and there are a lot of um, corporations, professions that are lobbying to benefit their goals, like real estate, realtor, CAR. They do a lot of lobbying.
They do.
Yeah, they do. So all these things are subject to uh, revisions, and that's the reason why there is no effective date yet, because it's being reviewed in Congress. So that's all. That's all I can say.
Hmm.
Um, there is no specific date to some other tax plan of our president. No dates yet, but it's being enacted and subject to review by Congress.
So being in real estate, I'm sure you uh, deal with clients where we as realtors cannot give legal or tax advice to our clients, right?
Yes, yes.
And many times we're telling them you need to talk to your legal professional, or you need to talk to your CPA and tax professional.
That's right.
Many clients say, yeah, I'll go ahead talk to them, but they don't talk to them
They do.
because it comes down to they don't have a tax professional.
That's
Many of
right.
them will try to do their own taxes,
That's right.
TurboTax
That's
or
right.
whatever the other tax program is.
Mhm.
So how do you make your case, and how do you tell your clients you need to sit down with a tax professional to look at your tax implications when you're buying a property or buying multiple properties?
Well, I just cite my own experience with my client who's earning 250,000. A couple that I work with. At first, she's trying to save money because my rates are somewhat. Well, I can say that uh, it's a professional rate in a way because I have to apply my knowledge in giving them a good tax advice. She did her tax return and she ended up, being audited. And it's too late for me to help her. The only way she can do OIC, which is often compromise, or wait for 20 years for uncollectible. But, she's making good money, so she has to pay for it. There's no way that we can help um, because on the software that she uses herself, she bought it in Costco, and the software just when she enter it, the software just plug it in to the wrong form and wrong line and everything, and it flags for audit. And it's too late when she came to me. She has already been audited, and she was not represented when she appear with the auditor. She has to be represented. So in this case scenario, when taxpayer earn that kind of income of 250, make sure that they secure a professional help in doing their taxes. They think that they can do it, but it's not because the software that they use, they don't know where the software really forwarded to the right line number or the right form. So that was the problem. It
Yeah.
flags. The auditor can see it. And, when she came to me, I just saw, just by looking at the form, it flags for audit.
I took a tax class
Uh-huh.
maybe about 2 years ago, a year and a half, 2 years ago.
Uh-huh.
I took a tax
Yeah,
class, and it was geared specifically toward real estate agents,
that's right.
and they were adamant: do not use TurboTax,
That's
do
right.
not use any of these software,
Yes.
because here's an amazing thing: when they create their software every single year,
Mm-hmm.
they have to provide a copy to the IRS, and the
Mm-hmm.
IRS then signs off on
Mm-hmm.
this is a true copy for this year in taxes.
Mm-hmm.
The problem, though, is out of all the possible deductions you can take, the IRS only allows about 30 to 35% of those to be listed within the software.
That's right.
All the other possible deductions you can take are not in that software.
Mm-hmm.
And so if you wanted to take those deductions, you can't through that software. So
Yeah,
that's where it just makes sense to go to a tax
that's
professional,
right.
because then they can do your taxes the correct
The
way.
correct way, and the fee of tax professions are deductible. So, it's really, they're not saving money by doing their own taxes.
I tell people, if you spend $400 on a tax
Yeah,
professional instead of spending, I don't know, what is it,
yeah,
$50 on TurboTax,
that's right.
so you spend an extra $350 or even $400,
Mm-hmm. Yeah.
but then you save, let's say, 1,000 or 2,000 in taxes,
Mm-hmm.
that more than pays for itself.
That's right. That's right. So,
And like you mentioned, a big thing is if you get audited,
mm-hmm.
then your tax professional usually will
Mm-hmm.
also represent you in that
Represent.
audit.
Yeah.
So it's another buffer in between.
It is. It is. It makes it more expensive, because you have to hire a profession to represent you, and the tax profession will negotiate with the IRS, but sometimes it's not very successful. So you really have to hire a professional doing your taxes.
Now, you just mentioned something a few minutes ago.
Mm-hmm.
OIC, offer and compromise,
Mm-hmm.
and non-collectible. What are those? Because I know offer and compromise, you hear on the radio all the time.
That's
There's
right.
ads that are
Yeah,
talking about offer and compromise, offer and compromise.
that's
So,
right.
what?
Offering compromise in order to be successful. Okay. Um, there are some requirements. Um, when the taxpayer is somewhat young and there's a future income, most offer in compromise are really declined by the IRS. The only thing that were successful were, retired and on a fixed income. There's no more future because they're already relying on their fixed income. So those are the successful ones that really can lower to 40%, reduce to 60 of their tax due, which is really you know but if you represent client who were um, younger and still with a good earning capacity, the only way you can do is make a negotiation for installment. That's it.
Now,
And
what about the non-collectible you
the
mentioned?
non-collectible are those like a realtor that makes good money and she did her tax return and everything, and that accumulates interest and penalties. It tantamount to about 100,000, and if she cannot pay it, um, you just have to wait for 20 years. Non-collectible,
So after
non-collectible
20 years,
items,
it drops off?
it drops off. Yeah,
Okay.
so that's the only thing.
Okay.
But
Now,
it's a longer period, 20 years.
yeah. Yeah. And I ask you because you hear commercials all the time on the radio
Yeah.
about offer and compromise and
Mm-hmm.
how, you know, and it's funny because they're always mentioning that it's a brand new IRS program. But
Yeah.
offer and compromise has been around forever,
Yeah.
and that's not nothing new. And
Mm-hmm.
it's very few select people that will actually get it.
That's right. There's only a few select people. For the younger ones, it's kind of hard to have a successful negotiation with the IRS because of the age and also the income that they still have future income.
Hmm.
But those that are retired and on a fixed income, those are successful ones.
Okay. Now, let's take a break here and let's talk about the wine. Have you tried the wine yet?
Not yet.
Try the wine. It's
Okay.
really good. So, for the
Mhm.
listeners, we're here drinking a bottle of Collide. This is an amazing red wine blend.
It's
And
good.
yeah, it's very good.
Very good.
Mark Harold Wines is the winemaker. In fact, Mark Harold worked over at Joseph Phelps and went over and started his own winery. And this is an amazing wine. And if anyone's ever tasted a Joseph Phelps and knows their quality of wines, you will not be surprised that this wine, Collide, tastes very similar to it, and for only $20, whereas Joseph Phelps is like $150 a bottle. So, so how's the wine?
Very good. I love it. Because since I'm on the board of directors of our association, East Bay Association of Enrolled Agents, we do have board meetings every month and we do serve wine. We have meet and greet,
Well, that's a
appreciation
fun board
nights. I
meeting.
know. Yeah, we do have wine, and this is very, very good.
Do you ever hold your board meetings up in Napa?
No, it's always in Dublin.
Okay.
Okay, and because the office is there in Dublin.
Do you head up to Napa yourself quite a bit?
Oh yeah. Mm-hmm.
What's your favorite winery out there? Do you have a favorite?
Well, I went to Beringer.
Oh
I
yeah.
went to Amaretto,
Okay.
the Love Castle,
Yeah.
and the other one. Well,
The
so
castle is amazing.
it is the castle. It's very good. I bought some wine over there, and it's good.
Yeah.
But this is good too. Do
Yeah.
they have their own winery in Napa?
I would assume so. I don't know. I actually found this wine through the Gary V wine club.
Uh-huh.
But I'm pretty sure they've got tours and everything up in
Oh,
Napa.
I see.
Yeah.
Okay.
Yeah, you
Mm-hmm.
mentioned Beringer. I like Beringer too, like some of
Yeah.
their wines, and
Mm-hmm. The
they have a
Behringers
they
are
have a
good.
nice old mansion
That's
that you can
right.
tour.
And also the Love Castle.
Yeah.
They have very good wine and also.
Yeah, their tour is fun to go through because you go
Mm-hmm.
through the entire castle.
Mm-hmm.
They have like a dungeon area.
That's right.
Yeah, and then
I
the owner of that
mm-hmm.
is also the owner of Visa Tui Winery.
Yeah. So this is good in a way because the one who uh, does this was with what home again?
Joseph Phelps.
Joseph Phelps.
Yeah,
Oh, in Napa.
yeah,
Oh, okay.
yeah, yeah. I'm pretty sure they're Napa. They might be Calistoga, but I'm pretty sure they're
Calistoga.
Napa. Yeah,
Okay, Joseph Phelps. Yeah.
yeah. And
Yeah.
their wine is really good. It's just very expensive, and so to find this one that has very similar characteristics,
Mm-hmm.
yet it's really well made, and for $20, I
Mm-hmm.
mean, this wine's a steal.
Oh, okay.
Yeah. And it gets
That's.
better too, especially if you take your time drinking and sipping.
Is
The
it
wine gets a lot better
is
as it
it
brews.
offered at Trader Joe? You can buy it.
I don't know. I haven't found it on Trader Joe's. I just go online to buy it.
Oh, okay.
Yeah,
Mm-hmm.
and that's probably the easiest way. Just go online, buy it, and
Buy
then have
it.
it shipped to
Okay.
you.
Yeah. All right. Because Behringer wine, you can buy it in Napa or Bevmo.
Hmm.
You can do that, but
Yeah, there's a lot of wineries that don't sell their wines inside of stores
oh,
because of
okay.
certain requirements or
Uh-huh.
even the labeling requirement
So you buy
is,
it this online. It's good. It's very
yeah.
good. Yeah, the taste is very, very. How do you call it? Suave. Yeah.
Yeah. Okay, well, I want to thank you for being on the podcast,
Mm-hmm.
and I'm glad you enjoyed the wine, and it was a good talk about real estate and taxes.
Mm-hmm.
So, for the listeners, if they want to get a hold of you for any tax advice,
Mm-hmm.
what's the best phone number to reach you at?
They can call my office 510-724-6409. That's my receptionist phone number, my secretary. And my cell phone is 510-517-9055.
Great. Well, thank you for being on the podcast.
Okay, thank you. And I do have a website which will be ongoing, www.aidatorres.com.
And that's spelled
A
AIDATORRES.com.
yes. Mm-hmm.
Perfect.
Thank you.
We'll go ahead and link that up in the description. And again, thank you for being on the podcast.
Thank you. Thank you.
Thank you so much for listening to the podcast. Thank you to our producer, Sam Lubin. Please subscribe, like, comment, and share the podcast. Remember, you can listen to the podcast on iTunes, Podbean, iHeartRadio, Google Play, SoundCloud, and anywhere else you listen to podcasts. For more information on my business as a property manager and real estate team, go visit my website at markguzman.com. I really want to thank all of you for listening. It means the world to me, and I hope today's episode provides you value in your day-to-day life. I created this podcast to help showcase the many great people that live in this world and help share some knowledge that I've learned along the way in life. Again, thank you for listening. Check out our sponsors, and I'll catch you on the next episode.